Yeah, Mike here. So good to be back from vacation. I really appreciate you guys letting me do that and everything. And I really did just kind of check out of everything. So it was a much needed vacation. And for those who don't know, we flew into Glacier National Park up there in Montana, drove down 4 days in Yellowstone, and then ended up in Mount Rushmore. So it was a busy, busy trip to say the least, but much needed. And I was so happy to be sleeping in my own bed last night. I slept for hours to say the least. So, and I'll try to get some pictures to you guys maybe tomorrow and stuff when we start doing this, but I'm just trying to get back in the routine. As I can see, I missed a lot. I missed a feud between Elon and Trump. That's a whole new thing, which we'll talk about as well. Market, with all these dips continuing to get bought up, we'll talk about why that is. And the good news is I do not have to throw myself out of this chair because I said, and I was going to do it, if we do hit up new all-time highs, without any form of QE, I will throw myself out of this chair. I no longer have to do that. Okay, and we'll talk about that because we do have QE going on again in a pretty big way. So, and we'll go over a lot of charts, obviously getting to the S&P, getting to Tesla, Nvidia, a couple other stocks to watch out for as well with things coming up. So let's just get into it. I'll try to get through this as fast as possible. It's a little bit longer video than usual just because I've been gone for quite a while. And I appreciate all your feedback on the videos I left for you guys. I always enjoy doing those for you. Now, of course, we talked about this, and this has changed a lot since I've been gone for about 11, 12 days now. What's happening? CTAs. Again, what are they doing? They're not trendsetters, they're trend followers. Now they cross the zero line. And right here was what the last time I reported this before I went on vacation. So they have been chasing this rally up. Okay, they come in when the trend is already moving up. And you can tell they've definitely been doing that. And especially above the zero line. So they seem to have covered all their shorts. And you can see it in this graph even better what they've done over the last month. As you can clearly see, this has increased from negative to positive because we talked about, the amount of shorts were insane. And so they have definitely been moving up on this. NAIM has been doing the same thing, that group. So, that's why you're seeing these dips to continue to get bought up and bought up and bought up. Because some of these funds have to do it. They have no choice. It's in their rules. It's how their algos work, stuff like that. You can see there's still, though, when you look at it in the past, you can see in that chart, still underweight, right? What their equity allocation is. You can see this was probably right when I went on vacation. I know this has moved higher. You can tell by the other chart, which is updated, the most recent stuff. But that's normal area right there is where these CTAs will actually be. And you can really see it in the Mag 7 because Apple's been lagging. Google's been lagging. You got Microsoft all-time highs. Avgo hit a new all-time high. Nvidia's trying to maybe do the same. We'll see as it starts to catch up. Obviously, Meta doing really well and a few others. But, you can see that as well. And so no surprise there. Now, what are we talking about with QE? Well, Bessent and the Treasury decided to step in, and they're going to take over the Fed's position since they think the Fed is lacking. And so they did basically launching this record amount of Treasury buybacks, which normally is what the Fed does. But now Bessent, the Treasury Secretary, who hinted about this, we talked about this weeks and weeks ago, that they would do it if they had to, and now they've stepped up and absolutely done it. As we can read through this real quick, when it says Bessent has made good on his threat, pulling off the mother of all Treasury buybacks on Tuesday of last week, a stunning $10 billion operation, the largest in U.S. history. If QE is the Fed's heavyweight champion, then these Treasury buybacks are quickly emerging as the scrappy contender called QE lite. The historical scale of this move can't be overstated. While the Treasuries gobbled up in the round had relatively short maturity dates from the 2025-2027, the game is about to shift into higher gear. On Wednesday, Bessent's Treasury will come back to the market again, this time targeting longer dated paper mature between 2036 and 2045. And the important part about this is, what are they doing this for? To keep the yields down, the 10 and the 30 year, right? Because obviously when other people come in, they're demanding a higher rate. Well, if the government's buying it, they're just like, we're good. We'll just buy these back. And so, again, the Fed normally does this, okay? And again, as we've talked about, that the Treasury Secretary and the Fed President actually meet every Monday for breakfast. So they've talked about this, but it's hard for the Fed to cut because look at unemployment. Look what's going on with this data, okay? And they're still just trying to wait and see or we think they should, obviously, in the short term, the tariffs going to have an effect on inflation? If so, when? Okay, and we'll find out this week coming up as we'll talk about the data and all that stuff. And we do have inflation data coming out this week. And so eventually, yes, you should see a one-time off effect. But the problem is, as we all know, the freaking tariffs keep changing all the time. So we don't even truly know. And so that's the biggest thing the Fed's trying to wait on. And if they wouldn't have made the mistake before and waited so long to actually start raising rates, I think it would be different. But it's just they're kind of painted into a corner right now. They want to make sure. So now the Treasury is doing something they've really never done before at this level. They're just stepping in and doing it. All right. So we should calm the bond market. And if they start buying Treasuries like crazy, well, guess what? If those bonds or treasuries aren't being bought up, guess where that money's going to go? It's going to go into the stock market most likely. So that's another thing that could absolutely move this market higher. And when we get into the S&P, you can see we're only about 2.3% from all-time highs. There are some things in the way here, which we'll talk about. But so far, trend lines have been holding up, which is good. This trend line has just been sitting there, just grinding up against it, retested multiple times, as you can see. And it's not bad. I mean, you can see every time we go into a discount, it just gets bought up big time. Okay, so far every dip keeps getting bought up, as we can see, and that longer term trend line right there, it was resistance, then support, then became resistance again, came back up with resistance again, but now we've tested it multiple times. Again, there's that trend line as well, and we just retested this trend line about 3 days ago and bounced from there. So again, you got a lot of funds trying to catch this thing, and every dip continues to get bought up, especially if it goes into a discount, which is the 0.5 fib or greater, or less, yeah, I should say greater. And if we do continue to grind up, that daily fair value gap, which is that box right there, should show us some kind of resistance, the form of liquidity they can draw to. And then, of course, you're looking for the trend lines to hold. Let's see how that goes. Now, Tesla, of course, this is a big drama. We'll talk about all about this right here when it comes to President Trump and Elon Musk. But big move down, but guess what? Trend line held once again. Depending on where you want to draw your fib, you were in a discount. So no surprise you get a bounce right there with such a massive drop. This trend line right here, which was support, then resistance, support, resistance, all that fun stuff held once again. We got the bounce. We always know that there's an event coming up this week on Thursday, which we'll talk about in just a minute. We can get rid of this trend line after grinding up there. And so I think a lot of people bought the dip up. The question is, all this stuff coming out on the weekend, how's it going to affect Tesla's the big case? There's a lot of liquidity above right here, so don't be surprised. There's a gap right here. If we do want to run up into the robotaxi event, that's probably going to be a good target right there, because you got this gap, which I need to actually make bigger right here. But also, if we draw the fib up here from that low to this high right here, that will put us in a major premium right there. So no surprise if that's going to happen. Because we know, again, just watch the options market on Tesla, because it does like to run up into events. They did announce June 12th, Thursday, as a robotaxi event. This ain't about revenue. This ain't about anything. Just how Tesla goes. So if you see calls flowing in, let's see if we hit this right here. Then finally, reality sets in, gets rejected. The drama still continues. Boom. And if we break that trend line, yeah, it's going to be a pretty rough downward move. There's no doubt about that. So you could see that happen. But again, everybody's waiting on Monday, because I'll show you about the drama we're talking about in just a second. But that's one path. The other path is Monday, boom, come down. See if this trend line holds once again, which will put you around like 280 right there. And then if we get a bounce up coming in robotaxi, and we'll see if it's a sell the news event or not. Just watch the call flow. That's the biggest thing when it comes to Tesla. And of course, we put the volume range, volume profile. The reason why we can move like this, have these big moves, is because that is a huge gap right there, right above it. You can see support beneath it right there. And so that's why you can see something like that. We've seen Tesla do it many, many times over, and you never know what's going to come out when it comes to tweeting and everything. But what I'm talking about with drama is very simple. The latest that came out that I saw was Trump says Elon Musk will face very serious consequences if he funds Democratic candidates, and we know his tweets actually do a lot more to the market than the fundamentals, technicals, or anything else. I mean, that's kind of how it is right now. And definitely let me know what you think about that stuff, because again, what I say months ago, I said, you're talking about two of the biggest egos on the planet, okay? One person who holds a position who's thought to be one of the most powerful people in the world. The other one is one of the richest people in the world. And so that's two big egos to get along. They actually got along way longer than I thought it was going to last. I thought, and I told you guys, I remember I said this, I said, if defense spending does not come down, if they don't cut that, especially if they increase it, all this is a bait and switch when it comes to trying to bring that budget deficit down. And when that happened, I thought they would have a fallout then, which according to reports, that's actually what happened, because he realized, oh, I came here to do this for nothing. This is a dog and pony show. This is politics. They're not really trying to cut the deficit at all, okay? Because you can't keep increased defense spending, not touch entitlements at all, and expect this deficit to come down. So it seems like the new idea is going to be to try to control the yield, maybe and try to get them pushed down by them buying back the bonds, okay? And maybe that brings down the yields, because right now we're actually, just to manage the debt, the interest is more than what we're actually spending on defense. It's over $1 trillion, I believe it is, just in interest expenses. And so it's going to be almost impossible to bring down that deficit, especially if this bill passes, as far as like the tax cuts and everything, the way it's, you know, drawn up at this point in time. That's going to continue to raise or increase the deficit. So we're going to see how that goes. But let me know what you think about all that drama. It is, I'm sitting on vacation. I got internet sometime in the mountains. Sometimes I don't, but I'm looking at this going, it's like 2 5-year-olds or something. I mean, it's so crazy. The two of the most, I guess, in a way, powerful people in the world are on Twitter going back at it. So yeah, it's interesting to say the least. So we'll see how it affects Tesla stock. Now, when it comes to Nvidia, I'm really surprised this trend line held so far, but it's just grinded up on this trend line right here the whole way up. You know, some people say it's a rising wedge. So, of course, when that breaks, obviously you're going to see, you know, maybe a decent dip. We'll see. I don't think it's going to be very decent at all. But one thing also to watch is how it keeps testing right there on the 143.20 area, and it keeps knocking its head on it and getting rejected, but, you know, making higher lows right there. Watch, see if that breaks. Yeah, I think we're going to all-time highs for sure on Nvidia. And you can see why there's no resistance. But if that trend line breaks, watch right there for it to come down and test 138.83 right there, I believe is the number you're looking at, to see if that holds. And so again, Nvidia, which I said Avgo, it said all-time high. Avgo's charts look way better, but Nvidia is trying to stage a comeback, and it was decent earnings and everything else. AMD is another one everybody's watching. This trend line is held, but you know, shockingly when it comes to AMD. But again, this one's been beat to death. About time it rebounds and half for people that have it. But again, this area right here is key. 116.43. Actually, I'll bring this down like 115.56. Really is what I'll be looking at to see if that holds. If the trend line breaks, looking for it to go between 111 and 113 right there in that daily fair value gap. If it moves up, and a lot of people are targeting that big trend line right there is what they're targeting. If it can move up right there, then you're looking between like 124, 125, depending on when it hits it. And again, if that breaks, it's going to be big for sure. And one reason is it's not just a trend line. It is also where the 200 moving average is. So you got trend line has been resistance going back to almost beginning of 2024 plus 200 moving average. So if that breaks, yeah, you're definitely going to be going higher up towards like 127 and then 142 if that is the case. I expect obviously a rejection there because it is the 200 and that trend line. So I just expect that for sure. Again, the other trend line breaks, we're going down that daily fair value gap, 111 to 113, or we're heading straight up here to the trend line and finally going to retest the 200, which just seems like it's been forever. Okay, this has been one of the weakest semiconductor stocks out there. We'll see if it can change its nickname. Now watch MP Materials here because, you know, it's had a big move up, starting to get maybe a little bit of a pullback right here on some news we got, which I'll talk about, both of them for sure. Obviously 49% move up in a very short amount of time right there. But you can see there is support right around this area. We might get a dip down between 23, 25, somewhere in that range. We'll have to see. But you see that gap right above right there? That's why it can blow through. And if it starts to move back up, 31, 32, definitely an area to watch right here. This is not based on fundamentals or anything else, just FYI. This area is key to this at. You can see right there how it's tested as support, then resistance, and all that fun stuff. So that line is going to be key if it comes back down. I don't see it coming back down to a discount where, you know, the fibs are at or anything. So I'm saying maybe you're lucky you get like a 23, 24.50, somewhere in there range. But watch that line to get tested for sure. And the reason why this thing gets moved all over the place, again, it's not fundamental. It's not the amount of money they make. It's, you know, what Trump's saying and what China's saying. So Trump sets to waive some legal requirements to boost critical minerals. That's good for them. What they always get knocked down by is China. So if China starts shipping over their rare earth minerals, then usually that's what you see a pullback for, is what we're getting. So watch MP Materials to go to 31, 32 when it does finally start to move back up. Palantir here, again, hit that fib like we talked about, which I put in here a few weeks ago. Came back down. It really is protecting where it was previous all-time high type of area, but really that 119 area is tested multiple times. I think it's 4 or 5 times now that it is tested, so we'll definitely mark that one out to see if it can hold that. If not, I'm looking for this one to come down probably between like 112, 115 right there. But again, we'll mark that out, see if it holds. Again, if we do get a retest of that and it holds, obviously you're looking at 135.15 as resistance. If that ends up breaking and you get above it, then 143.66 is going to be your next one. I was really surprised this held up as well as it did. Once the report came out that President Trump's tapping them to put a database on all of us and gather all the information on us. So kind of surprised about that, but we'll see. The big box at the bottom, by the way, is a weekly fair value gap around 99 to 110. So that will be big support for Palantir. UNH, I know I always get questions about this one. You can see it's actually consolidating, but you can see why, right? I mean, this thing right here on the volume range, volume profile, if it can actually start to move up, which of course everybody thinks is going to continue to consolidate for a while until it gets some kind of news or whatever, because everybody's starting to move into other stocks or whatever. But you can see, I mean, it can absolutely move 338, 351, that kind of stuff. Big gap up to 380. But then beneath, of course, if it comes down and we end up breaking like around like 297, I believe it is, then of course this thing can drop back down to the 260s, 270s for sure. I mean, it's a damaged chart, it's a damaged company, all kinds of stuff going on there. And this one has that instance to flash down versus really up more than anything else because all the bad stuff going on. They don't have earnings for a long time. Really not much of a catalyst, but a lot of people are absolutely accumulating between like 285 and 300 is what they've been accumulating at. And you can see it a little better right here what I'm talking about. So, you know, you drop there, you can go down to 270, 270.91 before you hit support. You get above that. Obviously, sky's kind of limited, may grind around, but you can clearly see consolidation well below the moving average. I mean, it's been consolidating for what is that, like 10 or 12 straight days around that area. And you got that daily fair value gap below. If it does come down right there, that should slow it down. That is liquidity to be grabbed though, so no mistake there. You can see it's been in the 6% range for two and a half weeks right now. So again, setting up some move. Don't be surprised if it comes down right there in that daily fair value gap, right around 275 to 290, somewhere in there. Keeps dipping back in there and bouncing, of course, if that's the case. Or gets there and starts running back to 320. And so I don't think anybody's expecting a huge move on this without some kind of catalyst or news in either direction. Again, trying to sell puts on it, that kind of fizzled out because the IV was so high, man. A lot of people were making money, including myself, just selling puts in this thing, which was cool. But, you know, not any high IV anymore. So that was a nice gravy train to ride as long as we could. And when you look, I mean, the bears are, and when you look at the momentum indicators, the bears are clearly still in charge of this thing. I mean, the RSI is still way down there. I mean, it got super oversold. MACD is exactly the same. And so, again, a lot of damage. We'll see if people continue to try to accumulate this or buy leaps and all that good stuff. I know some people are doing that as well with this one right here. So let me know what you're doing on that one. Now, when it comes to earnings, very light. Really nothing going on Monday right there. Some retail going on Tuesday. GameStop's a big one. People love to play that one right there, of course. You got Stitch Fix. Wednesday, looking at Chewy, Victoria's Secrets right there. Oracle in the afternoons. A lot of people will definitely keep their eye on that one. Thursday, you got Lovesac, a couple other retailers. Then you got Adobe, RH, something people are going to watch. Friday, nothing. Data is very limited, as you can see right here. CPI on Wednesday. 10-year bond auction people watch. Thursday, core PPI, regular PPI, unemployment claims. Friday, consumer sentiments going on. But you see Monday and Tuesday, really nothing. So it's going to be interesting to see how the market reacts on that one. So anyway, guys, good to be back. Please hit that like, subscribe button on your way out. On everything charts you want me to look over for you. Thank you for signing up for the membership. Less than McDonald's combo. And I will see you guys tomorrow for another fun one.